Okay.
Good evening, everyone.
Second, there's a Q&A button at the bottom of your screen. Please feel free to start sharing your questions. We will be taking them towards the second half of the webinar. Without further ado, let's begin our discussion. My first question is for Kaushal and Romita. What are the few mistakes you made, while appearing for PE VC interviews? Kaushal, you can begin.
I can go first. Thanks, Karan. I think the key mistake that I had made was in terms of not prepping my CV well enough. And what I mean by that is, what we tend to do is just prep in terms of what we had done your own respective module. For example, from a consulting background perspective, I would have done one module which is part of a larger project, which in turn only caters to one small part of the entire business. Whereas when you walk into a private equity interview, the first question someone asks when they read a line on your CV that says you spent 6 months at an apparel company is, oh, you spent 6 months at an apparel company. Tell me more about apparel businesses. Do you like them? Would you invest in them?
Yeah.
So I think one suggestion that I would have for folks is, you should prep your CV not just from a standpoint of what you've done, but sort of take it a little step back and just sort of understand the business or the unit economics, the financials of that business a little more, and prep it a little more holistically versus limited to your module or your project.
Oh, okay. Romita, any inputs to this one?
Yeah, I think for me, the mistake that I had made, I didn't have a lot of clarity of the asset class I wanted to be a part of, which is PE versus VC. So I think the structure of interviews for both these asset classes or firms and the kind of expectations are very different. So I think having that clarity, and interviewers are able to see through where your knack is, where your inclination is, having that clarity beforehand is helpful. Having said that, I think you also discover as you are part of the process. So I think it was both a mistake, but also something I've learned in the process. So yeah.
Got it. Shrija, any views on this one?
Yeah, I have two quick points to add, Karan. One mistake I did when I was interviewing is, in the beginning, when I wasn't fully prepared for the interviews, I went in thinking, okay, this will be a practice interview for me, but my dream fund. No, that's never the right approach to do. No matter how good you are at, I think it's important to be fully prepared before you go in for an interview. And one of the things I found very helpful is doing mock interviews with some of the seniors, who are already in private equities or venture capital side. They'll give you a lot of good feedback and you can go fully prepared. And the second thing is sleep well before the interview. Don't work late on the night before.
Yeah, I'm sure that's very insightful, guys. Thank you so much. My next question is, Kaushal, Romita, for you. How do people know that investing as a career is their calling? Any specific must-have interests, traits, skill sets that give them a better direction in narrowing down investing as a long-term career? We can begin with you, Romita, this time.
Sure. So I think, so there are two parts to it in my head of your question. One is investing broadly and VC in specific. So I think for people who are interested in investing in growth, investing in venture capital, the way you understand if you're interested or not is just, are you interested in smaller companies, understanding what the growth drivers for these companies are? Are you interested in understanding markets and what can be done in the market in terms of taking up the new trends that are coming up, whether it is consumer trends or any kind of supply chain changes that are also happening? That is one of the things that's more specific to venture capital. And I think secondly, if you're just someone who is interested in conceptually understanding financial ratios or financial metrics, as investors, we are always trying to draw the correlation between maths and analysis. So someone who's okay or wants to learn more of these two things, I think VC and broadly investing is their call.
Got it. That's helpful. Kaushal, any views to this?
Yeah, and I think investing is actually a little bit of a generalist role. So I don't think there is, at least at the pre-MBA level, or at least until a few years into investing. So I don't think there are specific traits or skills that are must-haves. I think a lot of it can be learned on the job. I think case in point, my colleague was IIT plus consulting background and saw his very first P&L when he came to Bain Capital. On the other hand, I was a CA, and my father is a public markets investor, so I've sort of grown up in sort of an investing environment. both of us did fairly well at the firm, right? So I don't think it's a preordained skill set that's required. Having said that, specifically in private equity, I think there are some things that you should enjoy. If you don't enjoy those, it becomes a very hard job to do. I think some of them is, you have to genuinely like problem solving, specifically in, limited data environments. You will not always have adequate information. I think private equity tends to be heavy on quantitative analysis. So, if you don't enjoy that, it's a little tough. You should generally enjoy quant analysis. And, unlike VC and consulting, PE tends to be more of a desk job than a people's job.
Correct.
Interactions are slightly lower than, what you would have in consulting or in VC. So, if that's something that really interests you, maybe, VC is more interesting for you. But otherwise, I really don't think there are some must-haves to join private equity.
Okay, interesting. My next question, this was for you, Shrija and Romita. People often get confused in terms of what asset class to choose. While, as Romita rightly mentioned, a lot is dependent on their personal inclination. But, would you want to suggest any clarification they need before choosing between private equity and venture capital? We can begin with you, Shrija, on this one.
Yeah, like you said, Karan, it's a personal choice at the end of the day that you have to make. But what I can, give you information is, like Kaushal mentioned, venture capital is for someone, if you're more into qualitative thinking and, you like to go out there, source a lot of deals, meet a lot of founders, understand the entrepreneur, understand his vision, and, think about which business model has breakout potential, or understand how the founder is as a leader, then venture capital is more for you. On the contrary, if you are more data driven, for example, if you are in private equity, more likely than not, even the MDs will sit with you on the business plan and they'll dig into the numbers. You need to be very comfortable with financial modeling, and it's for someone more interested in a structured way of investing. I think you should look at PE, and also for someone who is interested in the big checks. But at the end of the day, I'll conclude by saying it's a personal choice, and you need to think about what you want to do in the long run and where you want to go.
True. I hope that's insightful for everybody who's attending right now. Romita, the next one is for you, and it's a very interesting question that's come up. When is the right time once you start preparing and applying for a PE/VC interview?
So I'll give you the natural recruiting cycle for PE/VCs. It's usually around anywhere between July to December. It's different across different firms of a given year. But from a candidate standpoint, I think a candidate should definitely have completed a year to year and a half in consulting or banking experiences, because you need to have that base to go to the interviews, and a basic understanding of a P&L, or a basic understanding of how do you evaluate a market, how do you size a particular market, or whether a business makes sense or not. Be able to opine on things. I think that's very important, whether you're in a PE or a VC fund. So I think that's when you feel like you have that ramp up where you're able to opine and be on top of things and trends that are happening. I think you get into this at that time. And from a firm perspective, it's July to December, I think, for most firms.
Yeah. Okay. Kaushal, considering you come from a consulting background, any variations to that view from what Romita mentioned?
No, I think it's pretty much, in terms of timelines, it's pretty much what she said. It's a pretty similar cycle. I think, like giving yourself enough 4 to 6 weeks to prepare, depending on where you are in your preparation journey. I think 4 to 6 weeks is sort of good. So I think I sort of agree with that. Yeah.
Okay. The next question's for you, Romita. How do a candidate really prepares for a fund which actually prefers non-consulting candidates? So if the talent pool is preferred is consulting, how does one really prepare for that?
Sure. So I think for everyone who is interviewing, one thing you should be comfortable with is interviewers read your resume quite diligently before interviewing you. So if they have taken you in for an interview, they know you are a banker or a non-consultant. So they are not going to ask you questions that are more consulting focused. They're going to ask you questions about your work experience. So I think that's something you should be comfortable with till you're able to talk about your work, about what you have done. I think that's what matters more. But in terms of what you need to prepare for in addition to your past work experiences, is just understand like any sector. Probably like I'm a huge fan of the consumer sector, right? So before 3-4 months before I started in preparing for the interviews, I started reading about what's happening in the consumer sector in the country, having some kind of opinion on a particular sub vertical. Like I was working on one of the deals at BAML, and then I started developing a thesis on what's happening in the F&B sector, being aware of what's happening both from a public com perspective versus private com perspective, and having an opinion. It might just be completely wrong, but having a thesis about, okay, this will work and why this should work. So I think that's the kind of thinking structure funds look for. So in addition to whatever you can, if you are interested in a VC interview, definitely something you should do as a part of preparation.
Okay, got it. I hope this has been, really interesting. Over to my colleague Richa, who will continue the second leg of the discussion. Thank you to all the panelists for your time. Over to you, Richa.
Thanks, Karan. Hi, guys. My first question is to you, Kaushal and Srija. And I want to know, what should one focus on to crack interview rounds revolving around financial modeling? I know a lot of candidates get really stressed about it. And any short courses or any online reading material that you found handy and would like to recommend? So let's start with Srija.
Yeah, thanks, Richa. One thing I would say is it's very important to have a basic understanding of all the metrics on the P&L, cash flow, and balance sheet, and also, how to make inferences from them. Like, if they changed over the last 2-3 years, why did they change? And, how does the company look because of that? You should be very well familiar and understand all the returns metrics and the free cash flow metrics in particular. That's almost, you will get grilled in almost every interview you do. And finally, you should have a good grip of all the different valuation methodologies, and which method to use, where to use an EV to EBITDA multiple, or where to use a PE multiple, and why. The why part is more important than what. And to answer the second part of your question on what materials to use, at least in my case, I found my on-the-job learning to be more helpful, like the business plans I worked on when I was more or less, and my seniors. But other than that, to get good understanding of corporate finance, you can refer to Damodaran's videos. They're very famous. And, if you're someone who is into tech investing, you can look at A Junior VC by Aviral Bhatnagar. He analyzes startups in a really good way.
Thanks, Srija. Kaushal, would you like to add?
Yeah, sure. I think I sort of echo most of what Srija said. I have a little different point of view because, Srija, I guess you came from a banking background. So you had a little more context in terms of some of the corporate finance terms, etc. I think most people who come from a consulting background tend to not have that much of at least working knowledge of some of these things. I think it puts you at a slight disadvantage in some funds which focus more on IB recruitment, who want some of those skills at the very beginning. But for some of the other funds, just the basic working knowledge of some of these things is more, it gets you through. In that respect, I think what you outlined is absolutely right. I think the stuff to focus on is just ensuring that you know at least what the 3 financial statements are, how they link together, preparing a basic 3 financial model. I think, like the ratio analysis that you outlined, just what the basic valuation methodologies are and what the merits, demerits of each of them are. In terms of sources, I think I completely agree. Ashwath Damodaran videos on YouTube are great. There's a platform called Mergers and Inquisitions, which also has a lot of free content that's useful. I think another thing for people, at least not with the banking background, is, there are a few chapters in CFA level 1, which are extremely helpful. I would just point you out to just understanding P&L, understanding balance sheet, understanding cash flow, understanding ratio analysis, and how these link together. And those are 5 chapters in CFA level 1, again, freely available online. No need to go in depth into it, but like a good reference material to start off.
Thanks, Kaushal. I'm sure everyone has taken a note of that. Moving to you, Romita, what do you think? How important is it to master financial modeling if someone is to choose VC as a career? Do VC funds have as strict a filter as PE, and how much of it is really applied on the job?
Sorry, I think there was a network issue. Richa, can you repeat the question?
Yeah, I wanted to know what your views are on the same question. I mean, how important is financial modeling if someone was to choose VC as a career, and is it like how how much of it is really applied on the job eventually?
Sure. Definitely not in the depth that private equities do, because their deals are structured and there's a lot more number analysis that goes into it. Having said that, people do want to know whether you are a numbers person, and by that we mean that we also try to understand the growth drivers of a company. Where will the growth come from? Then we try to understand the unit economics. So having the basic understanding of how the cost structure of a company is, where the operating leverage for a company comes from, how will the unit economics evolve in a sustainable manner. Because for us, I think as a venture capitalist, you have to understand a customer, whether it's a B2B or B2C, as a lifetime value versus how much you're paying to acquire it. So having that basic understanding of how do you evaluate a customer's lifetime value versus CAC, I think in different scenarios it evolves into a different way of understanding it. But you need to have that basic mathematical understanding, and definitely a basic understanding of P&L and balance sheet. Like when you are evaluating a company, every company has a P&L and balance sheet, whether they are profitable or not.
Right.
So you need to be able to understand that and break it down in terms of margins and how it's going to evolve over the future.
Thanks, Romita. That's very helpful. Kaushal, coming back to you, in an interview, what's the best way? I think you touched upon that in the first question. What's the best way to summarize your work on a specific deal or a project? Just to make sure that it's just appropriate.
Sure. I think again, if you've done a 6-month or a 12-month project at consulting or similarly at IB, I guess it's very easy to start rambling on things that you've done. I think the number one thing to do is sort of not ramble. I think the way I used to tend to do it is, just say, hey, I worked at an apparel company. We did 5 things. One of, product portfolio, pricing, number 3, number 4, number 5. I'm happy to go into each of them in further detail. What do you want me to speak more about? And sort of just, give a quick overview of what the project was really about, what you did, and allow the interviewer to sort of, ask the next question on where to go. And I think it's a great way to also guide the conversation to say, if you want the discussion to go a certain way, to not just say, I spend the most amount of time doing pricing. Let's speak about that if you don't mind. So, be short, be brief, and let the interviewer probe a little more.
Yeah, that makes sense. I'll come back to you, Kaushal, on the next question, and Srija, you as well. The question is, what are the different types and formats of case studies that you know of, and any specific tips that you can share on how to prepare for each of those different types of case studies? So, Kaushal, would you like to start this?
Sure. I think the most common question you get in a PE interview is you walk into a room and someone reads your CV and the first thing they say is, we're looking to evaluate ABC company in XYZ industry. How will you evaluate it? That's it. It's just a one-line problem statement. So, my suggestion is always to, come up with a framework that works well for you, that, sort of outlines this answer. Just in terms of how will you evaluate a company in a particular industry or a sector. You don't need any industry context for it. You can do it in any simple manner that helps you. I think I had a simple framework which was, I would like to evaluate the opportunity first. And if the opportunity is interesting, go on to the valuation aspect of it. Within the opportunity itself, sort of answer 3 questions, which is the market itself attractive in terms of size and growth potential? If yes, then does the company have a right to win in this market in terms of the competitive landscape? And if yes, then, are the financial profile and unit economics of the company attractive enough? If all 3 are yes, then move on to a valuation discussion. So just sort of have your own framework that works to answer a question, is this opportunity attractive? I think that's a slightly different from what we have in, consulting cases.
Srija, would you like to add to that?
Yeah, just to add on to that, I think Kaushal summarized it very well. You'll be given an investment case where you have to evaluate a company and tell them about your thoughts. And of course, one of the primary steps to do that is to build a 3-statement model in most of the funds. And sometimes funds ask for an LBO model to just make yourself familiar with that as well. And once that is done, you'll be required to present your views on the company, which is as important as the financial model. Like, you need to tell them what are some of the top 3 things that you like about the company and what are some of the risks that you see in it. And, how would you go about diligencing those risks? And also, finally, you should also be able to justify whatever assumptions you have used in your financial model. So for that, I would highly recommend take 1 or 2 public companies, do a similar exercise and practice it with someone senior, so that you don't give your first attempt in the interview.
I think just to add to that, I think she has a great answer. Sorry, Richa, just a second. Which is, I think another great source is actually an analyst report. Just pick up an analyst report of any industry that you're interested in, and that basically just outlines what really matters in that industry. And you can sort of build your framework around that. So another good input is, just an analyst report as a starting point for preparation.
Thanks, guys. That's very insightful. My next question again is to you, Shrija, and it's something that's very frequently asked in, I think, all the interviews. And the question is, why do you want to work with us? And in your view, how is this question best answered, and what all should someone know about the fund before stepping into that interview?
Yeah, that's a good question, Richa. In fact, this is one of the very generic questions asked in every interview and asked towards the end. And hence, I even ignored it in a couple of interviews and ended up falling flat in the interview. So I would highly recommend, you don't need to know everything that the fund does, but you need to know basics such as what is the style of investing, or, what do they typically expect from a candidate who is joining at your level. So try Googling, and if you can, try getting in touch with some junior at that fund through mutual contacts. That will give you a really good idea of what you're stepping in. And, you are not expected to know about all the investments that the fund did, but you will definitely get bonus points if you can talk about a couple of their investments. Pick one or two in a sector you're most familiar with, and tell them your views. Just naming the investment will not give you any.
Sure, thanks. Now coming to my last question, and I want Srija and Romita to answer this for me. What are the KRAs of an analyst specifically, and what does a typical day look like for you, a typical work day? So Srija, can you take that first, please?
Yeah, sure. So in private equity, my day varies a lot. I can just summarize my whole year, and I can tell you roughly 50% of my time goes into evaluating new deals. In that, most of the time I spend, looking at the different numbers and building a financial model around it. And 30% of the time also goes into managing the portfolio companies and, seeing what they're doing, or, what initiatives you can get implemented over there. And 20% of the time I just spend on sector research, speaking to different people on, what's happening in the market and all of that. The KRAs, if you ask me, of a private equity analyst is I think a little bit similar to investment banking. You at the end of the day, when you're running a deal, you have to do a lot of diligence, and you'll end up coordinating with a lot of banks, advisors, etc. And you need to be really good at financial modeling if you're getting into private equity, or become good once you get into one.
Got it. Ramita, how about you?
Yeah. To answer both your questions, I'll start with the day. I think I agree with Shrija. Even in VC, days are not the same at all. I'll say it first. I think 1/3, the way to think of VC is 1/3 of your time goes in active deal evaluation, and VCs are a lot more active with deals because we do a greater number of deals in a given year. 1/3 of the time goes in portfolio work. You have to understand that these teams are these are all teams almost like you have to understand it's their childhood when you get involved with them, right? So there's a lot of involvement in terms of new product ideas, strategic, operational, as teams start hiring more people, expanding, etc. So there's a lot of involvement with the portfolio. And third is sourcing. So as a VC fund, I think Kaushal mentioned it a little earlier, you have to be very comfortable with reaching out to people, speaking to them. In fact, half of your day in the office is just meeting people. You're either with the partners, meeting some new founders, or you yourself have set up meeting to meet founders. So I think that's three big part of the job. And when it comes to KRA, you are evaluated in exactly these three. How you've been able to source. Different firms have different ways of measuring your sourcing ability. Your deal evaluation capability, which will have your quant analysis as well as your analysis of how to understand a market, etc. And portfolio work, of what have you been able to contribute to the portfolio. And I think for a VC, and I think for PEs too, unlike banking and consulting, buy-side firms are very small in teams. There are almost 12 to people in every team. So I think cultural fit is a big aspect for buy-side firms, and it's also a high-stress job. So I think it is important both from the candidate perspective and the recruiter perspective that there is a person fit, like you fit culturally in the team, and you are evaluated on that. That how are you able to contribute to the team culturally and socially? So I think those are the 4 metrics we are evaluated.
Yeah, I think you covered it really well. And thank you so much, guys, for all the amazing insights. And now I'll request Sonali to take the discussion forward from here. Thanks.
Thanks, Richa. Thank you, everyone. That was very insightful. We will now move forward to the audience Q&A section, and I can see, over 50 to 60 questions that have already flowed in, but the paucity of time, we may have to kind of restrict that to a couple of questions. My next question, Ramita, this is in context to what you just mentioned about culture, and it's linked to that. So, give me your views on this. So the question states, when you start with your search, how do you do the due diligence on the work culture of the firm, given the smaller sizes of the funds and hence limited access to people who are working within the funds, and consequently determining if you will fit that culture?
Sure. So I think in this aspect, I would say networking is really important when you are doing your due diligence. So don't be, if you have friends, a lot of people come from consulting, people especially have friends in all the firms. So I think it's relatively easier for you consultants to reach out and talk to the required people. But for people who are coming from non-consulting background, don't be scared of reaching out. In fact, be very comfortable to reach out to the junior member, set up a call and or up a quick chat, whichever is more comfortable. And when you talk to them, one is obviously you're trying to get how you get along with them, because believe me, a firm tends to hire people similar to them. So if you meet one or two people in the firm, you will get a sense of what the culture of the firm is, what's the kind of people who are working there. So I think that's a big part of the DD, is just networking and meeting people in different firms. You'll get to know where you fit better.
Got it. No, that's quite helpful. Our next question is on work-life balance, which is $1 million question. I think, Kaushal, you are at least risk to answer that. So why don't you go first? The question states work-life balance, is it as bad as they say it is? I'm just stating it verbatim.
If I had to be brutally honest, the number of hours you spend cumulatively in a 12-month period in consulting or in IB, I don't have first-hand experience, but at least from what I hear, is very similar to what you would spend at a PE fund. I don't think it's any more. I think the issue with PE funds especially is the unpredictability of it. You don't know when a big deal is going to come up, and you got to leave everything and invest the next 6 weeks into that project and not go home. So that does happen. But then there's also a lull period where there are no deals happening. Private equity has little sourcing because deals come to you through bankers, and therefore when there is a lull period, there is a lull period, and you effectively go home at 4 or 5 p.m. Or you should be. So there's a lot of ebbs and flows in PE work-life balance. The intense period is really intense, and the lull period is really low. But the cumulative hours are okay. I think the issue is more with the unpredictability of when the intense period comes, because you can't really plan for it. So I've seen senior folks plan holidays and have to move it around in the last minute because a big deal comes up. So it's more to do with the unpredictability of it, and you have to sort of accept that as you come in.
Yeah, just to add on to that, I think it also varies from fund to fund. I think VCs are relatively a little bit more flexible as to, you don't need to work till 12 a.m. in most of the cases. And, if you are really that keen on having a work-life balance, you should also do some research on, which funds have weekends free, etc.
Yeah.
Srija, you are aware that your bosses have access to this, right? And they are seeing you live. Okay.
My fund has good work-life balance in case.
Perfect. Okay. The next question I have, Ramita, maybe you can address this. It says, I'm a CA and a CFA with 2 years of real estate private equity experience. Do I need to have iBanking or consulting experience to increase my chances of getting into private equity?
I do not think so. I would say I've met decent number of CAs who have gotten into private equities and VCs after some amount of work experience. In fact, one of our partners at our firm is a CA, and he's gotten into investing and is very successful, as we can see. So I think it is harder. I would definitely say there's friction, but the friction is not because of a prejudice against non-banking or non-consulting. It's just the network effect, right? Like people are alumni of other consulting firms, other banking firms, so tend to go back there and hire. So I think then you're again going back to my point. Like then if you're not in from the the more usual set of job past experiences or work experiences or schools, just network. I think if people know you and people get to know you or know your name, it really helps when they read your resumes or when they come across your resume. So I just say that push the pedal on networking more if you're from the more non-usual jobs, but I don't think that should make you uncomfortable or make you rethink if the industry is for you or not.
Got it. It's quite insightful. My next question, Kaushal, maybe you can address this, is the dilemma about asset class. So a lot of people are very apprehensive about getting into real estate and the fear of not being able to move out to a peer fund that is a sector agnostic fund, which is more often than not their first preference, right? So how easy or difficult is it for somebody who has entered an infra or real estate asset class, whether in investment banking or in private equity, and now is looking to kind of make a move to a more general fund per se?
I think you're right. There are very different asset classes, infra and real estate, which is why most funds have different teams for infra and real estate and different teams for all other sectors. Right. I think if you're like 3 or 4 years into real estate investing or infra investing, it may become hard to make that switch because the mindset is very, very different. One is more a yield-based return, one is more growth-based return. So it's a very different investing mindset and philosophy. So if you're 3 or 4 years into it, I think it can get hard. But I think I agree with Romita, right? I don't think, if you've done 2 years of real estate investing versus doing consulting or IB, I think you should be at the same platform to get into a sector agnostic fund. So, 2 years of real estate infra investing, getting you into a pre-MBA role at some of the other funds, I don't think that's much of a concern. I think getting into a track role after 3 or 4 years of work experience in infra fund could be tough.
Got it.
Yeah. Sonali, just sorry to interrupt. I just see our interviewers already in the screen, which is Harjot, Atin, and Mayank. And I'm sure the audience will be waiting now from that side of the world to understand ki, exactly puchte kya ho yaar interview mein, right? So I think take 1 or 2 more questions and then we'll invite our interviewers to come in.
Perfect.
Super.
Perfect.
Thank you.
So here we go with our last question. And Romita, maybe you can pick this up. Has cold emails as a source to seek an opportunity ever worked for you? Or for even if Srija and Kaushal, if you have inputs, happy to hear you guys, in getting a PE or a VC job? And if yes, how did you go about it?
In fact, the thing is, A91 is a cold calling result for me. I had so I was moving from the US to India and had reached out to Kaushik, who's one of our partners. Okay. I had reached out to him on email and he responded. We chatted and he was still in a different firm at the time. And when he made the switch to A91, then we got back in touch and that's how the interview process started. So cold calling works, guys. Don't think it doesn't work. But you have to be okay with one thing is cold calling doesn't mean that every time you reach out, a person will respond. You have to understand everyone in PVC are in a high stress job. They are putting in a lot of long hours. So it's not like they don't want to respond. Sometimes they just forget. And there are quite a few people reaching out to them, right? But that shouldn't restrict you. Reach out. Even if your response rate is 5% or 4%, that's fine. You talk to those 3 or 4 people that you are able to reach out to, get to know the industry better, because first-hand experience does say a lot to you. So even our next hire, like we've hired an associate, she reached out just through cold calling and that's how we interviewed her. So cold calling works. It's just about your comfort zone and it takes time. It requires more patience than just going to an interview and getting to hear the result, but it works. It does work.
That's interesting. Perfect, guys. Thank you so much, Srija, Kaushal, and Romita for joining us today. and sharing such insightful views. I am pretty certain our audience equally enjoyed it and has made a note of all the tips and tricks that you guys have shared. And we will now move on to the second part of our webinar, which is to understand what do these aspirational funds really look for while they're recruiting, and what is it that really goes on in the interviewer's mind. Thank you so much, guys. And I will now request our next set of panelists to join in. Harjot, Mayank, Atin. Hi, how are you?
Hi, Sonali. Good. How are you?
Very well.
Hey, hi.
Welcome, guys. Mayank, can you come on the video? Mayank, you're there?
Yes, I am, Sonali. Can you hear me?
Yes, I can. Perfect. How have you been? All of you all well?
All good.
Perfect. Thank you so much for joining us. Thank you so much for joining us today. We just finished a very interesting session with the other side of the table where they kind of shared, and I'm sure you must have seen some part of it in terms of how they really went about and sharing the mistakes they made and the other tips that they kind of shared with us. Moving forward, I will obviously quickly introduce all our panelists. So Harjot Dhaliwal. Harjot recently featured in Growth Cap's global list as one of the top women in private equity. Harjot is currently a principal at Apex Partners, where she focuses on investments in the tech and telco roles. She was associated with Warburg Pincus, TA Associates, and Rothschild prior to that. Thanks for joining in, Harjot.
Thanks, Sonali.
Moving forward, we have Atin, an integral part of the investments team of one of the leading funds in the country. Atin is currently a VP with Advent International. He focuses on investment opportunities across IT, healthcare, and consumer as a larger sector. Prior to that, he was a part of the investments team at Bain Capital and a consultant with Bain & Company. Welcome, Atin. Up next, we have Mayank Porwal. He's a part of the most influential VC fund in the country, Sequoia Capital. Mayank is currently an investment manager with Sequoia. Outside of his investing career, Mayank comes with in-depth experience in category management and operations with firms like Paper to Stone, Quick, and Procter & Gamble. Glad to have you with us, Mayank. Moving forward, guys, we have a very quick warm-up for everyone, a fun-filled rapid fire, which is a set of 2 questions per panelist, and then we kind of move forward to the much-awaited Q&A session post that. So my first question is for Atin and followed by Harjot and Mayank. So Atin, you're ready to jump in?
Let's do it.
Perfect. The most bizarre and amusing answer you've heard from a candidate on why they want to join your fund?
I think the honest answers are the most amusing ones because you typically don't hear them, whereas everyone is usually prepared. I think the one I remember is, I think a guy just said, I don't want a loan after my MBA. I can do private equity with you guys for 2 years and then go for an MBA.
Yeah, that's quite honest. Perfect. The next question is for Atin, you again. The household chore you've become good at during lockdown.
So I love cooking, but what I've really become good at during lockdown is actually changing baby diapers.
Wow. And your wife will concur to that, right?
Yeah, of course. She loves it.
Perfect.
Pass it on to me.
Perfect. Moving forward, Harjot, the next question is for you. 3 wrong assumptions that candidates carry about a buy-side job or a role.
Okay, this is an intense question, less of a rapid fire. But unfortunately, candidates these days are very well prepared. By the time they get to their second rounds, most of this gets filtered out. So.
Got it. One word that describes you outside of work, office.
Tough one, but I'm going to go with fun.
With fun? Okay. My next question is for you. Most outstanding hobby you've seen in a resume?
It reminds me of a candidate who actually bought a small distillery to extract color and flavors out of flour. And I felt he should have interviewed for a PhD candidates
and not in general for investment analysts. But yeah, that was pretty bizarre.
That's quite interesting. My next question again for you, Mayank. If you were not a fund manager, what would you be?
Okay, yeah, I'm going to give an aspirational answer. I love mountains. I would rather be a trekker or a guide in the foothills of Himalaya if I were not managing investments.
I think you can still apply for a quick sabbatical, and we can put in a word to your bosses.
Yeah, famous last words, Sonali.
Perfect. That was fantastic, guys. Moving forward to the key agenda of this webinar. Here are a set of questions that race through and basically every undergrad's mind who aspires to explore a pre-MBA role with a PE or a VC fund. So my first question is for Mayank and Atin. Mayank, just one request, given that your experience is obviously VC as an asset class, in your responses, maybe you can add a little more flavor from a VC standpoint to give our audience a diverse view on these questions. So here is the first question. Atin, maybe you can go first. What's the best way to seek answers to questions like, will I fit the investing world? What should I choose between PE versus VC? Because, when you generally start your career, they're just too raw and nascent to really have answers to these questions.
So I think if I were to honestly answer that question, I think most of the candidates that we see these days, right, they are all, I would say, filtered one level. So all of them are anyways good. So I think from a fit perspective, I'm actually not really worried about will these guys fit or not. I think now the question that people are actually asking is, will I really enjoy it? Will I like it? And if you really have to find about that, I think the most easiest way is actually, just speak to people, like speak to people who've been in the industry, like VPs, associates, and people love talking. Like you'll reach out to someone, you'll understand what is the day like, what are they exactly doing? Do you think you'll have a knack for this? And you can look at it from two ways, like you do it for 2 years and you can move on. But if you really are thinking about a career perspective, I think eventually you have to like and enjoy it. So just understanding what exactly people do on a day in, day out basis gives a good profession for your lifetime. I would just do that if I have to answer those questions.
Makes sense. Mayank, anything to add?
Yeah, sure. I'll add the VC perspective to what Adi said. I think every VC or a PE analyst has basically 3 jobs. One is sourcing, finding out new companies. Second is deal work, which is figuring out if an opportunity is investable. And third is portfolio, which is once you have found a company, you invested, how do you help them becoming successful, right? I think the earlier in the life cycle of investments you go, the more, you spend your time on 1 and 2. So, sourcing and, deal work will be much more important for a VC world as compared to, if you look at the PE world, probably, your deal work and how you manage your portfolio will be much more important. So I think it all boils down to your personality and what your long-term ambitions are. If you are a person who really likes interacting with many, many entrepreneurs, the idea of getting out of your bed and, having a breakfast with an entrepreneur every day would excite you. Now it probably would be a virtual, Zoom coffee. But, if it excites you, I think VC is a good idea. If you like to cover more width of ideas than going deep into a few parts and, figuring those out, I think then VC is a better part for you as well. If you really like interacting with the new ideas every day, it's a job for you. And I think maybe the final part I would say is, if you're not clear what you want to do in life, or you really want to become an entrepreneur, being an early stage VC actually helps you, broaden the horizon a lot. You could continue in investing, which is an option now. You could, if you want to become an entrepreneur, the kind of network and the people the VC job actually entails will help you a lot. And, if you want to join one of the companies you ended up working with in your analyst role and, get into a rocket ship before just it is, becoming more obvious to everyone else, it's again a very good opportunity. So I would say some of those things are very important and, finally boils down to your personality.
Got it. My next question is for Harjot and Mayank. And Harjot, maybe you can go first. While Mayank, you've pretty much covered a larger portion of this, but if there's anything additional to what you just said, in what ways is an analyst role or a job different in a PE fund or a VC fund versus what they do in investment bank or a consulting platform?
Right. I think the biggest difference that you'll see in the role is that you're no longer working on short projects with an end date. I think you have to really think like an owner. If you're looking at a company, you have to really understand the sort of industry dynamics. You have to think about it from every single angle when you really diligence an asset. And a lot of people will depend on your insights for some of the critical decisions, right? You'll be a very integral part of decision making. Even when we go to sort of global ICs, the IC looks towards the associate for his point of view, because he or she is the person who's the closest to the data. So I think just moving away from this project has come to an end to thinking like an owner and really knowing that, look, people are counting on you for a lot of critical decision making. I think that's probably the biggest shift that people need to make.
That's quite interesting. Mike, your views?
Yes, I think again a few more complimentary views on the VC side. When you are an analyst or an investment banker, your partners or the senior folks in your team will eventually get you a deal that you have to work on. So the filter is actually much narrower. When you are an analyst, you will end up meeting most of the companies, and it's your responsibility to bring out the best one to the firm. So building a conviction and deciding what to work on and what not to work on is a very different and a very refreshing change, I would say, as compared to what you probably would be doing earlier. I think the second thing would be mostly around relationships. Many relationships that you work with your clients, or founders, or with funds in your investment banking or analyst roles, is basically very at the moment. In the VC world, when you meet a good founder, they may not be ready for raising capital with you right now, maybe in 6 months or 12 months or 2 years or 3 years. So having that patience and your capability to build long-term relationships actually takes you very long. And then that's, I think, a fundamental difference than what you would see in this job versus the previous ones.
Got it. That's quite helpful. My next question is to you, Atin. What are some of the external short courses, online or offline, any reading materials that you recommend they can enroll or refer to while they are prepping up to apply for a PE role or an interview?
So I think for either a PE or a VC, right, I think people try and first check on, what you've really done. I don't think people are looking for going outside your own scope. So for instance, let's say if you have been in a consulting background, or let's say if you've been in an IB background, I would just focus on the core skills that you are expected to know. None of us would practically go and test you on the non-core skills that you have developed over a period of time, right? Or will not be expected. So keeping that in mind, right? Let's say if you're from a consulting background, I just keep focusing on the cases, try and speak to a few people here and there, do those cases, is what I would focus on. If you're from IB side, I think people will want you to have opinion on deals, what's happening. All of those, I'd probably try and focus a little more on that. Outside of that, I think it's just good to prep yourself overall for your own interests, and that as you come across in different interviews. Let's say if you're not from a finance background, I would just say that you can. I'm an engineer, right? So I would have gone through Damodaran, for instance. It's a very good book on corporate finance. There are a lot of blogs these days. So there is Wall Street Oasis is the one that I actually like. I think those you can go through. You'll figure out a lot of materials on investing. But again, I think my advice would be that you should focus on what you've done and play your strengths in the interview. Typically, that works the best. Instead of really going outside the way and preparing and coming half-hearted on that particular aspect of the interview. I would rather just say that I'm not aware about financial concepts. So while go ahead and ask me the question, I'll try and answer. But I'm not the one who know those concepts. And people will understand and appreciate that. I think people are looking for someone who can pick things fast and learn and grow, versus investing on you for modeling skill if you're a consulting guy to do.
Got it. No, that's interesting. This modeling skill, frankly, is like a big nightmare, unfortunately, for people from the consulting background. And we have 1 or 2 questions where we'll try and address them. So maybe you can give them some guidance on that and help them, seek through that. Perfect. My next question is for Harjot and Mayank. What are some of the important aspects that you look for in a CV while screening someone for an analyst associate for your team, your fund? What's your answer? Harjot, you can go first, if that's okay.
Sure. So I would say, 3-4 things that we typically look for in a CV. The first one is obviously your academic performance, whether it's in your 10 standard, 12 standard, where you've sort of gone to undergrad, what kind of grades you got in undergrad. So, that's always a sort of hygiene criteria, I would say. I think the second thing in my view would be just quality of experience. Like, have you demonstrated that you've gone above and beyond your role? Have you taken up more ownership and responsibility than was sort of asked of you?
Sure.
The third thing I would say is, to the extent that you can demonstrate some interest in investing, that is always a plus. Whether you have your own portfolios, a lot of people sort of tend to do sort of CFAs, in whichever way, or like, banking internships, in whichever way you're able to demonstrate that, look, you have a general inclination towards this.
Sure.
And the last thing I would say is, look, we're at the end of the day looking for well-rounded individuals, people who are going to go and represent the firm in front of CEOs, founders, various industry participants. So, instances of like taking initiative, taking leadership, having a sort of well-rounded personality, I would say it's also very important at the end of the day. I'll sort of pause there and have my young add in.
Yeah, I think Harjot covered most of the things quite well. Maybe one or two things to add from VC perspective is, one is probably the entrepreneurial bent that that you would need for this job is something that we would love to see. And when I say the bent, it doesn't have to be that you were a startup, founder earlier or something like that. It could be in small clubs that you founded in your college time, or you've been leaders of some of the festivals that have happened in your college's time. It could be the tech internships that you have chosen over going with a consulting firm or a large bank in your internship to show that, I want to learn that part of the world well.
Yeah.
I think some of those things really help us, and also gets you a better view of what the job will entail, and get you in similar neighborhood and people that you will end up interacting with the most with. That's very important. And I think finally what Harjot said, the overall rounded personality, it's an important part. You're in the business of selling yourself in many critical positions. It's always good to have people who have many more touch points, many more hobbies, have done exceptionally well in things they have picked up in life, and it always helps you a lot to get going.
Got it. Thanks for that.
If I can just add one more tactical point to this. I think when we are filtering the CVs, right? I've done this for like 6 batches now. Effectively, there are like 160, 170 CVs that I'll be seeing.
Wow.
One single piece I think will be helpful for people to do is just have a one-pager and make it simple for someone to just go through it, like highlighting the right thing. Because it's very difficult after a point to just go and figure out what's the right thing to look at. And people have gone beyond 2 pages, 3 pages. I think that's just one tactical bit. I think that's all both Harjot and Mayank have covered very well.
No, I think a very valid point, because by the time you go on you don't go on the second or the third page. By the time you go, you've kind of lost interest in trying to underline and highlight what is it that's important in the resume. So very valid point, Atin. Moving forward, my next question is for you, Atin and Mayank. What are the top 3 questions that you would ask a candidate while they interview with you? So there are a lot of times these questions that revolve around the deals that people have done, and we have a subsequent question that we'll cover in terms of what exactly should they cover of the deals that they've done. But what are the top 3 questions that come to your mind?
I can go.
Mayank, do you want to go first?
I'll go first, and I think please add. So I think from VC perspective, I think the top few things that we look at, one is, of course, I think understanding the depth of your network, which I think essentially is a part of the sourcing part that we discussed early on. So, understanding how well connected are you with folks and people that are in the startup ecosystem. They may be founders, they may be people who are working in other VC firms. There may be people, who are product managers or operations managers in the startup. So getting a sense of how close you are to the ecosystem. It's just not about, studying your story articles. I mean, that's only a very small part of it. But, how well versed are you with the ecosystem in general is something that we love to see. So asking for those is an important part. Second part is mostly how informed you are in some of the sectors, or what's your view on some of the sectors you like. To Atin's point, it could be a function of what you have done as a case in your consulting or investment banking stint, or it could be something that you've been following passionately for a long time. We love to get into depth and understand why do you like it, what are the reasons, why do you think a startup can disrupt something in that market, etc. I think, and third part is just the analytical capability, which I think is a very kosher thing. But your capability to ensure you can multiply 2 into 2, in a well-versed manner. Estimate the market sizes, how large can an opportunity be on top of your head. Some of these very intuitive things. And many candidates may be thinking that's easy. it's not as easy as it seems in interviews, and you end up fumbling a lot. So I think these are the things. I think please add.
I think it's very well covered. Right? So I think the outside of the typical cases that we'll do, I think typically most PE firms, both from experience at Bain Cap and at Advent, most people will do case studies, right? But outside of this, I think three key things that people would like to test in the candidate, which I typically do. I think first is just generally raw smarts, right? Even how Mayank mentioned, it's just checking basic things like it could be a puzzle, it could be a mental math problem, or it could be a sizing problem. And just to break ice or also understand how the candidate thinks or is structured and are the raw smarts there or not. And the second thing I would test is usually, is there an ability to form an opinion? Because in an investing environment, forming opinion is very important. You have to keep taking calls. If you're not able to prioritize, you'll keep moving and going around in circles. And it happens at every level. Like if you are an associate, let's say, there'll be like 10 things that you have to do, you have to prioritize. So everyone will not be involved. So, it'll be simple things around, if you've done something, let's say a investment thesis or whatever. If you're an IB guy, I would just ask that, the deal that is done, do you think it will make money? Or why do you think it will not make money? Or let's say for a consultant, the value that you're delivering to the client, how is actually impacting? So having that broader view and an opinion on what you've been doing and has then been impactful, I think is very important. I think the third bit, at least I've seen candidates who typically come out more successful in interview is just high degree of self-awareness. And there are very simple things, right, which people would have not thought about. As simple as, let's say, people will ask about weakness and strengths and whatever, right? But people will have like prepared answers. But I think the key I would ask is, let's say if I were to call your supervisor after this call, what are the top 3 things he'll tell me about you? So even like high degree of self-awareness about that own individual, I would say that is quite important. So those are the 3 things I would test outside of the case study round.
Got it. That's very, very insightful, guys, and very helpful. In the interest of time, while we do have sufficient time at hand, we will now move forward to a couple of questions that we yet have to address, and my colleague Arihant will continue this further and address the rest of them.
Thank you, Sonali. Hello, everyone. So Harjot has been quiet for some time, so let me come to her. So Harjot, can you just highlight some of the common personality traits or soft skills that you look for in a candidate while interviewing for APACs?
Right. So I think a few different things. The first, in my view, is that, this job involves constant learning and taking in new information and sort of improving your perspective and learning from diverse perspectives. So I'd say candidates should be open to like learning, adapting, and sort of growing as individuals. It's not a clear soft skill. It's more, you can see through their experiences. I think the second I would put is just being a self-starter and having that entrepreneurial spirit. A lot of times, you'll have a broad problem statement and you have got to go figure it out. So you need to be a self-starter. The third thing I would say is just in terms of cultural fit. You not only have to collaborate with, say, people in the India office, but also a lot of times with global teams, with global ICs, with our portfolio operating groups. So just being a team player, knowing how to work with people, rather than being a sort of a lone wolf, I think that's very, very important in these setups. And a strong work ethic goes without saying. So those would be the key things that I typically focus on.
Got it. Interesting. Just to top this up, from a VC standpoint, I'll come to Mayank. Like you said, entrepreneurial bent, for example, is common across private equity and venture capital. But is there anything specifically that you look for, personality trait-wise, or any soft skills that you look for from a VC standpoint? Mayank, we can't hear you. Sorry.
Am I audible now?
Yes, now.
Sorry. So I was saying Harjot has covered those very well. I think having an overall nice personality, your capability to sell in tough situations are important. Maybe 1 or 2 traits which are very important for our businesses. One is hustle. If you can hustle, it's a very, very important and a very, very strong asset that you can have. More often than not, in the venture world, you have to move with the speed of market. If there's an interesting deal that's coming your way and somebody else puts an offer before you do, you can't say that, I don't have enough time to see the numbers, or I did not get enough time to interact, etc. How do you manage those situations and, sell yourself into those parts and make sure that you get a honest view and a real view to look at things is very important. So I think having strong hustle is a very, very important sort of characteristics, and I love people and candidates who have shown that hustle, including in interviews where they say that I've reached out to your portfolio founder and I spoke to him for 45 minutes. I know him, but he gave me these insights and I'm happy to share with you. Many of those things I really, really like.
Got it. Interesting. Let me come back to Harjot again. Harjot, any few common mistakes that you come across while interviewing, especially with IB and consulting candidates, particularly?
Yeah, I think Adin brought this up earlier also. I think the first thing is do your research, right? Speak with people in the industry, speak with friends. Internet is a great resource. Learn a little bit about, what this job is all about. And, the best way the best way to sort of prepare is to actually just think about an investment idea. If you're a consultant, it could be a project that you've worked on. Just take an investing lens to that industry or to that company. Pressure test that thesis with, your friends, peers, seniors. So that, you start getting prepared with a little bit of basics around what are the fundamental tools that go into investing, right? Read research. I think come prepared is my broader thing. And there are lots of ways to do it. Do it in like small bits, but try to come prepared a little.
Got it. I have another question for you, Harjot. This is one of the hottest topics amongst the candidates, the case study round. So would you be able to highlight what's the overall objective? Now we understand in terms of the parts of the case study, what does it entail, but what's the overall objective of case study round? And is there any guidance, any best practice that one should follow?
Yeah, so look, case study rounds don't have a right answer first, right? It's meant to test two different things. It's meant to test, do you have the critical thinking to look at a business, more investing mindset? And I would say the second is it's meant to test whether you have clarity in thought and communication, right? So, the first part of it, which is the investing mindset, what we're really looking for is, can you understand what the underlying market fundamentals are? Can you articulate what are the strengths and weaknesses of the business? Can you use basic corporate finance tools? I don't want you to know what like minority interest is, but can you use basic tools around, what are margins? What does growth mean? What is capital employed? So just understand fundamentals of these. And then once you've sort of applied that critical thinking, can you actually present it in 15 minutes to a group of people with clarity in thought, logic, and just communicate your point of view? I think a lot of people get stuck in getting the model right or getting the slides beautiful or whatever. But, the idea is, look, critically think about the business and articulate your views in like 15 minutes. I think that's the overall objective.
Got it. Interesting. Mayank, your view. So we've gotten this question very often. How much financial modeling skills are important for a VC career? What's your take?
Okay, this could be a controversial
on that one.
But my view is that basic fundamental modeling is something that is a part of almost any investing job that you will do. You should have a capability to look at 10 numbers and extrapolate over the next few years by assumptions of what the market has to offer, what company has to offer, and actually build a view. So I do feel that there will be a basic mathematical modeling that you should be able to do. It has less to do with the technicalities of whether do you understand the asset and liability part of the balance sheet, or will you be asked to do discounted cash flow analysis, etc. Fortunately in venture you don't have a lot of companies with profitability, so we can spare that part. But jokes aside, the intent of modeling, a little bit to what Harjot said, is not to necessarily go into the nitty-gritties. It's a function of how can you extrapolate and how can you use the assumptions that you have in front of you to picture the business, a decade on, or a 5, 6, 7 years later on, see how that may look like, and is that something that is as a dream case would excite you. And that's, I think, broadly what I would say. And very interesting point I would like to sort of mention here is that, unlike traditional modeling where you model numbers and financials. In venture world, we model many random things. We model number of daily users that our app can get to and figure out monetization later. It could be about the payment volumes that you can process. So it's a lot more creative and less prescriptionary in general than the usual way of modeling that would be in your head.
Got it. This is helpful. Gives us a perspective both in terms of what a VC modeling sort of intent looks like and versus a private equity. I think Atin now has been quiet for some time, so I specifically wanted to ask this question to him. What is the probability of a program pre-MBA program role converting into a full-time role? Given that you've been sort of experienced in pre-MBA hiring for quite some time now, what's your view on that one?
I think firms have taken different approaches. I'll be very frank and honest. And I think so. There are firms who typically still prefer that they go the MBA route before going to a track role, and they are still starting to make some exceptions. Like while I was at Baincap, we made one exception, and the associate continued to get on the VP track role. If I'm not wrong, Harjot would know, but I think Apex also has made an exception or two. Blackstone has made an exception or two. But I think again, I would say by DNA, all these firms would still think about MBA as an initial bit to get to track. I think the reasons are very different. Some firms are relatively more open. I think GA considers it very seriously on the track path. Chris Cap, I know as a matter of fact, considers very seriously.
KKR also does that.
Different routes on how they think about structuring that program. But if you ask me, I think it's limited opportunity if you are relatively not willing to, let's say, do an MBA and then come back. But there are opening up. So, 2 years down the line, when these folks actually go and apply, hopefully people would have been more open.
Got it. Mayank, from a VC perspective, given, there are a few Sequoia also has made. What's your view on that one? Mayank, we can't hear you.
Am I audible now, Hari?
Yes.
Yeah.
So I was saying that, if you were to ask me this question 5 years ago, I would have said maybe you couldn't count 1 or 2 firms as an exception who would let people continue and make a career out of investing without an MBA. Today, it's much more diverse. The top tier VCs in India actually have given offer to 1 or 2 candidates at least, to actually have a full-time partner track role, which basically means that, I think some of the skill sets that you are important in the business, which is, what we sort of have discussed so far. As long as you're good in that part and you have continued to evolve in your investment judgment, I think people are more open to it. Having said this, I would still say it's not a norm. It's still an exception. So you would end up having, fewer candidates every year from each firm to go to the next level. But the trend is certainly getting better.
Got it. So this is very insightful. Awesome. Thank you so much. And I thoroughly enjoyed co-hosting this session. I will now hand it over to Sonali for the Q&A bit. Signing off. Thank you.
Thank you.
Thanks, Aryant. Thank you, everyone. Guys, I have 1-2 more questions, which I, was just thinking through and thought it'll be best to kind of have them addressed. And Atin, maybe you can take this up. Does rejection for a pre-MBA role spoil your chances for any further association with the fund? Can they think of reapplying to the same fund after a few years?
So I think, people again form opinions. If you've, let's say, applied at a fund, if you're going to apply the very next year, I think the chances are going to be difficult because, people would have formed opinion, and given there is a large pool available, I would say it would be relatively tough. But let's say, there's a change in role that you've done after you applied. Let's say you applied, you went and did your MBA, coming back, or you applied, went to another fund, worked for 2 years and coming back, then I think people are open. But it's the very next year, per se, for a very similar role, I think it's going to be relatively tough.
Got it.
Yeah, I think if I may add on that,
yeah, sure.
I would say that, look, if you personally feel that you were very underprepared and you come across as a smart person but just didn't come prepared, I think I would still encourage people to reapply. And we've seen those instances as well. Sometimes, people are just not there, or they're very young when they've sort of made their first application. at least we stay open about these things, and we give candidates pretty direct feedback on, look, you're slightly underprepared or slightly lower on the work X right now, come to us next year.
Got it. Perfect. Mayank, I have one question for you, and maybe this is more apt for the VC industry per se, because in private equity I've usually not heard that, but happy to hear your views. What are the expectations that you have as far as the deal knowledge of a specific fund is concerned when you come for an interview? So do you expect them to obviously know of the Sequoia deals per se, but to what extent and how important is it?
Sure. So Sonali, we need to keep in mind that, while we end up, shortlisting and hiring 1 or 2 candidates in the entire process, there are 50 people with very similar resume, very similar work ex coming in and actually, sort of interviewing. So being well informed about the firm that you're interviewing always helps a lot. So I would, strongly encourage people at least to have basic idea of, what kind of investments do the firms do, what kind of sectors are they active in, and that helps a lot to make sure that you are informed. This is again a very basic common sense part, as Atin had mentioned earlier, but it's an important part. Having said this, when in interviews we ask candidates about the deals that we have done and the ones that you like, etc., these are not necessarily there to expect them to give us the exact answer or the thesis that Sequoia has built. What it actually is meant to is to have an honest view and honest opinion of what they feel. So I always tell candidates, don't pick the best investment that Sequoia has done when you're interviewing because it's a $10 billion company. Pick something which you think you're closer to as a problem statement, and something that you could defend and actually have an original organic thought of to discuss about. So that's the intent. It's not about trying to say that it has to be what we mentioned, etc. It's more about making sure that you have an original and prepared view about the investments we have done.
Got it. Makes sense. Perfect. That was very, very insightful, guys. I can see like a whole host of 100 questions that are already there in front of us from the audience. So let me, begin, and I'll have a couple of questions being addressed by all of you. Okay. This, I think, is a question which Atin and Harjot would love to answer, because that's something which has always been most of the global PE funds asked. So this comes from a returning Indian. And the question is, what is the probability of funds in India wanting to hire returning Indians? And what are a couple of negatives that would kind of get associated to them, the fact that they're coming from outside of India and they don't have India deal experience? So maybe Harjot and Atin, you can pick this up.
Sure. Okay, I'll go first. Look, we're very open to this. At the associate level, when you come in with 1 or 2 years of work ex, we don't expect you to know the Indian market inside out. I think it's more important that you demonstrate the right traits around, having the drive to do investing, having the entrepreneurial sort of spirit, having the sort of critical thinking and analytic ability. So sure, very open to this.
Atin, over to you.
So I think, very frankly, we've been actually every year we try and see if we can get an international candidate pool.
Yeah.
Very honestly, right? We try to want to diversify the overall thought process that we get. I think Mayan had highlighted earlier, and then even Harjot highlighted earlier. I think the associate that we are getting, I think we really want them to get views on table, which we can take differential insights. I think having a diverse pool really, really helps. So every year, I've been actively looking for the last 3-4 years. I think the pool is very small. Hopefully this will improve further now. So I'm actually looking forward to it.
Perfect. So guys, all of you sitting out there wanting to, we are happy to share Harjot and Atin's email ID with you, and you can bombard them. Perfect.
Sure.
Okay, moving forward. So the question, Mike, maybe you can address this. What is the possible roadmap to break into a VC without a tier 1 MBA? So for example, if I am a part of the founder's office and I'm working on strategic initiatives, how easy or difficult is it for me to get into a VC role? Mayank, I'm not sure if we can hear you. No, guys, is it only me?
Yeah, I can hear you, Sonali. So I think Mayank's line is there.
Mayank, we can't hear you. Okay, let me come back to Mayank, and in the interim, I will have my next question. Coming back to Atin, does too much of experience in any field, IB, PE, consulting, hurt your chances of getting into a pre-MBA role? You know, is there like an ideal time frame to say that 2 to 3 years? Usually you hear comments like 1 year is too raw, 3 years is too much. So what's your take on that?
I think, you know, if you've seen the entire program, the way it has evolved, I think people have typically gotten at 2 years. Once they finish 2 years, the intent is that 2 years you've done something else. You come here, work for 2 to 3 years and go and do your MBA.
Okay.
The intent of a pre-MBA role historically has been, as we discussed earlier, right, has been that, you know, folks will go for MBA. So here has been a sweet spot. I think we've been trying to experiment. Like, for example, this year, you know, we are trying to see if we can get someone for 3 years, for instance. We are trying to experiment. But I would say still the ideal spot is 2 years of experience, come and work for 2 to 3 years here, and then, you know, go and do an MBA or whatever you want to do and track.
Got it. Perfect. Harjot, maybe you can answer this. So we have a lot of folks who've joined in from the Big Fours and a lot of other consulting platforms who are a part of the due diligence team. You know, while we understand that the chances are slim, but what is it that they can do to, you know, be able to crack a role with a PE or a VC, and what would your guidance be to them if they do aspire to?
Yeah, so I honestly wouldn't put the chances as slim. We go pretty wide when we look for candidates. And look, if you have done, you know, a private equity due diligence, or you've worked in like a transaction advisory team at one of the Big Four, I think those are relevant sets of experiences. I think what you need to really demonstrate is the fact that, look, you're really interested in this. So, you know, reach out to people that you know in the industry, learn more about it, speak to people at the firms that you want to interview with. And lastly, I would say come prepared with like investment ideas, right? So you need to sort of show you really want this and you differentiate yourself. Do your research, prepare some ideas and come, and I think that would really help.
Got it. Perfect. My last question is to Atin. Maybe we can come back to you, Mayank, for one important question that is there with us. Is it possible to move from a VC fund to a PE fund in future in the event you kind of realize that you're not enjoying it? And how practical is that?
So I think it is quite possible. I think I've seen seen shift both ways, in fact, over the last 4 or 5 years. And if you see, I think people are now evaluating firms, and I think people should actually do that. Candidates should evaluate firms and what they really want to do. And, you know, if there is someone who's like said that, guys, you know, I've done it for 3 months, 6 months, I don't like, I want to go out. And I've seen people do that either ways. And people are very open about it. I think, as I mentioned, we love diverse experience. People really want to get different perspective of looking at things. Yeah. So getting someone from a VC or a hedge fund into a PE fund, we would love that. And I've seen both of that happen, by the way, in the last 2 years.
Yeah. Good. Perfect. Mayank, I have my last question for the webinar for you. So this comes from somebody who doesn't come from an IIT background. And the question is, most of the analysts at Sequoia have IIT background and consulting experience. What are your suggestions for someone with non-IT background to get an analyst role? And can you share a bit more about the 2-year experience analyst program at Sequoia?
Sure. So Sonali, before I start, I hope I'm audible now.
Yes, you are. No problem.
Okay, so apologies for it. To the first question, you know, like Atin mentioned, we also do look for a lot of diversities. And, you know, I think while IIT background helps a little bit because of, your chances of getting into a consulting job or having a larger pool of people around you who are in the startup ecosystem, it's fundamentally high. But I would say that's not the 100. That's not the only pool that we hire from. We actually have people who are from Delhi University. We actually have people who have very strong operational background, which is they have spent 2-3 years actually as product managers or operating people in startups, which I think again is a very relevant experience. We have a few candidates who actually studied outside India and bring in a fresh perspective of some sectors that we like, for example software, which is more strong in the US market, and if you have spent their time there as well, it's an interesting part. So I wouldn't necessarily say that I being IIT from IIT is the only way. It helps a little bit, but I think the pool is getting more and more diverse. If you can actually demonstrate your passion for startups, or you actually have a spike of having worked at a very, very good startup in the early days, and then you come here, I think your chances are equally great. It doesn't decrease any further.
Got it. That's quite helpful.
Yeah. On the second part, Sonali, on the analyst program, again, I think it's a program that is meant to give you the best experience before you decide what you want to do next on your life. Again, very flexible. 2 to 3 years. We try to make sure that candidates from our pool are actually being a part of it. We hire folks from investment banking background, from consulting background, from startup background. For example, I was an operator before I came to Sequoia. So it's very diverse. As we mentioned earlier, the role entails essentially working with founders, sourcing companies, and bringing the best companies on the table. Hopefully, own up a few sectors where you could have an organic and a very genuine view about what needs to be done and how investment should pan out. And then hopefully also have enough passion and empathy for startups to continue to work around the startup ecosystem, if not at Sequoia, with startups, or as an investor or as an entrepreneur. But that's pretty much it. I'm happy to sort of share more, but that's pretty much it from me, Sonali.
Got it. Thank you so much, Mayank. Well, this brings us to the end of the webinar now. It was indeed an extremely engaging session, and after getting a perspective from both sides of the table, I'm sure our audience now knows what it really takes to crack an interview successfully with a PE or a VC fund. We were joined by over 900 viewers today. Thank you so much, Atin. Thanks a lot, Harjot. And thank you so much, Mayank, for sharing your views with us. To our audience, appreciate the time you have taken out to be with us today. And we hope you've enjoyed the session as much as we did hosting it. Good night and stay safe. Thank you so much, guys.
Thanks.
Thank you, everyone. Have a good day. Bye-bye.
Thank you.
Thank you.